Solved problems. Adjusting entries with workings. Problem. Prepare adjusting journal entries with computations after each entry. 1. It is estimated that only 90% of the accounts receivable of 120,000 can be collected. 2. On December 31, details of the note receivable with the debit balance of 85,000 is as follows. Debit note, amount, interest rate, terms. December 1, 50,000, 8%, 180 days. December 16, 20,000, 6%, 90 days. December 21, 15,000, 6%, 30 days. The prepaid insurance has a balance of 450,000. Date of policy, amount, term of policy. January 1, 200,000, 2 years. July 1, 150,000, 1 year. October 1, 100,000, 1 year. 4. The business purchased 11,750 office supplies during the current year. Asset method was used in recording the transaction. At the end of the year, only 2,750 of office supplies remained on hand. 5. The store equipment account as December 31, first year of operation, has a balance of 595,000 with the following details. Date of purchase, item, cost, useful life. January 1, freezers, 185,000, 10 years. February 14, adding machine, 50,000, 10 years. July 1, display cabinet, 70,000, 10 years. January 15, stoves, 190,000, 15 years. January 15, kitchen equipment, 100,000, 5 years. 6. The delivery truck with cost of 1,200,000, 6. The delivery truck with cost of 1,200,000 was purchased on October 1 of the current year. 7. Of the sales, 500,000, PHP 50,000 is an advance payment of customer for delivery of goods on January of the following year. 8. The promotion services owed to a provider is not yet paid, 20,000. 9. The two store helpers work for 6 days a week, Monday to Saturday. Each helper receives a daily wage of 550. Wages are paid every Saturday of the week. December 31 falls on Wednesday. 10. Income taxes for the year is 90,000, payable the following year. Solution. Adjusting journal entries. 1. It is estimated that only 90% of the accounts receivable of 120,000 can be collected. Bad debts account data are 12,000. Allowance for bad debt and doubtful debt 12,000. Being 10% of the accounts receivable of 120,000 are doubtful for collection, working 120,000 into 10%, 12,000. 2. On December 31, details of the note receivable with the debit balance of 85,000 is as follows. Date of note, amount, interest rate, terms. December 1, 50,000, 8%, 180 days. December 16, 20,000, 6%, 90 days. December 21, 15,000, 6%, 30 days. Account receivable debit 333.33, account receivable debit 50, account receivable debit 25. Interest on note receivable income 408.33, working. Notes receivable 50,000, rate of interest 8%, per year 4,000. Number of days in a year assumed 360, per day 11.11, number of days 180, total interest 2,000. Number of days in December 30, interest due as on 31st December 333.33. Note 2, notes receivable 20,000, rate of interest 6%, per year 1,200. Number of days in a year assumed 360, per day 3.33, number of days 90, total interest 300. Number of days in December 15, total interest due 50. Note receivable 3, notes receivable amount 15,000, rate of interest 6%, per year it is 900. Number of days in a year assumed 360, per day 2.50, number of days 30, total interest 75. Number of days in December 10, interest due in December 25. 3. The prepaid insurance has a balance of 450,000. Date of policy, amount, term of policy. January 1, 200,000, 2 years. July 1, 150,000, 1 year. October 1, 100,000, 1 year. Insurance expense debit 200,000. Prepaid insurance credit 200,000. Being the expired insurance expenses on 31st December. Working. Data policy, amount, term, period expired, expired insurance. January 1, 200,000, 2 years. Expired period is 1 year. 200,000 by 2, 100,000. July 1, 150,000, 1 year. Expired period 6 months. 150,000 by 2, 75,000. October 1, 100,000. Year 1, 3 months. 100,000 by 4, 25,000. Total 200,000. 4. The business purchased 11,750 office supplies during the current year. Asset method was used in recording the transaction. At the end of the year, 2,750 of office supplies remained on hand. Entry. Office supplies expense debit 9,000. Office supplies asset credit 9,000. Office supplies purchased 11,750. Less office supplies remained on 31st December 2750. Office supplies expense 9,000. 5. The store equipment account as of December 31, first year of operation, has a balance of 95,000 with the following details. Date of purchase, item, cost, useful life. January 1, freezers 185,000, 10 years. February 14, adding machine 50,000. February 14, adding machine 50,000, 10 years. July 1, display cabinet 70,000, 10 years. January 15, stoves 190,000, 15 years. January 15, kitchen equipment 100,000, 5 years. Journal entry. Depreciation on freezers debit 18,500. Depreciation of adding machine debit 4,375. Depreciation display cabinet 3,500. Depreciation of stoves 12,138.89. Depreciation on kitchen equipment 19,166.67. Accumulated depreciation on freezers 18,500. Accumulated depreciation of adding machine 4,375 credit. Accumulated depreciation display cabinet 3,500 credit. Accumulated depreciation stoves 12,138.89 credit. Accumulated depreciation kitchen equipment 19,166.67 credit, being the depreciation on fixed assets for the year 2000. Working. Data purchase, item, cost, useful life in years, depreciation per year, expired life in years, depreciation calculation, depreciation. January 1, freezers 185,000, useful life 10 years, depreciation per year 18,500. So for 1 year it is 18,500. February 14, adding machine, cost 50,000, useful life 10 years, depreciation per year 5,000, expired life in years 10.5 months. 5,000 by 12 into 10.5, 4,375. July 1, display cabinet, cost 70,000, useful life in years 10, depreciation per year 7,000, expired life in years 6 months. Depreciation calculation 700 by 12 into 6, 3,500. January 15, stoves 190,000, useful life in years 15, depreciation per year 12,066.67, expired life in years 11.5 months. Depreciation 12,666.67 by 12 into 11.5, 12,138.89. January 15, kitchen equipment 100,000, useful life in years 5, depreciation per year 20,000, expired life in years 11.5 months. Depreciation calculation 20,000 by 12 into 11.5, 19,166.67. Total depreciation 57,680.56. 6. The delivery truck with cost of 1,200,000 was purchased on October for the current year. Delivery truck debit 1,200,000. Accounts payable credit 1,200,000, being the delivery truck bought on credit. 7. Of the sales of 500,000, PHB 50,000 is an advance payment of a customer for a delivery of goods on January of the following year. Entry. Sales debit 50,000, unearned income 50,000, being the unearned income for the year. 8. The promotion services owed to a provider is not yet paid 20,000. Advertising and promotion expense debit 20,000. Accrued advertising and promotion expenses 20,000, being the advertising and promotion expenses unpaid. 9. The store helpers work for 6 days a week, Monday to Saturday. Each helper receives a daily wage of $550. Wages are paid every Saturday of the week. December 31 falls on Wednesday. Entry: salaries and wages expense debit 3,300. Accrued salaries and wages 3,300. Being the salaries and wages accrued. Working: number of store helpers 2. Number of days in a week 6. Daily wage per worker 550. Salary for the week 6,600. Salary for 3 days from Monday to Wednesday 3,300. 10. The income taxes for the year is 90,000 payable the following year. Entry: income tax expense debit 90,000, accrued income tax 90,000, being the income tax accrued and not yet paid. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.